Hey everybody, it's Brian Shannon from Alphatrends.net. Today's Friday, the 1st of December 2017. We had a pretty interesting week for the markets. Semiconductors lost a big chunk, down 6%. The NASDAQ lost a percent, which is kind of surprising that it wasn't a little bit weaker given this weakness in the semiconductors. But let's take a look at these markets because, again, it was pretty interesting. In particular today, you guys hear me talk about the volume weighted average price a lot. And, I use this TC2000, and right here, you can see this anchor. This is called the Anchored VWAP by Alphatrends. I had them create that for me as a tool, and what it allows us to do is once that's clicked, to click anywhere on the chart to configure where the volume weighted average price is from any point in time. So for instance, today when the news came out about Trump, we'll just put a volume weighted average price on that, and you can see when that news first came out, we saw a sharp sell-off down 3.5, 4 points there, and as that happened, the buyers came back in. We created a higher low right here and then broke above the volume weighted average price from that event. So what that's telling us on a very small time frame, that is intraday here, just from that event, that basically the market says that did not matter. We digested that move, the emotional move lower, and the average price the S&P 500 traded at from that level was down here at 263.37, a full dollar lower, meaning that since that event, it's basically not important to the market. The market absorbed it and said, not important, let's move on. Where did that market pull back down towards is another interesting thing. If you take a look at the volume weighted average price off of the lows that we saw in November, that's right here after this sharp pullback. We'll go down to a 30-minute time frame to get a closer look at that. And we're going to use that volume weighted average price again and put it off of this low. Lo and behold, that's precisely where the buyers were found. If you think that's a coincidence, fine. If you think it's because there are programs based around that, I think you're onto something, and that's where I'm trying to lead you. Anyways, I don't want to make this all just about the volume weighted average price. I talk about it all the time. Take a look at Alpha Trends on Twitter, and you'll see more information will be coming a lot on that. Anyways, today we saw big volume. The market was down, but only price pays, and we're basically, we're down a little bit, but for the week we had a positive week for the S&P 500, and we remain in a bull market. We only got down to the 10-day moving average. I mean, this market has been a little bit overbought, but we still see that there are dip buyers in there, and the dip buyers are emerging at a logical place at that volume weighted average price. So going forward next week, we're going to be looking at this as our more important level of support if we fall from here. But I think it will also be important for the next few days to keep an eye on the volume weighted average price since this Trump news. The market hates uncertainty. It seems to have absorbed it for now, but I'm going to keep a close eye on that for subscribers each day, and I'll be talking about it there. So going into next week, we remain in an uptrend. The buyers are in control, and the NASDAQ, we saw that the volume weighted average price I've been talking about for the last several weeks is where we found some buyers once again today, and that is since this gap here in late October. We've seen that buyers emerge from that area on several occasions. It doesn't mean it's perfect and you should buy exactly at that level. I view all potential levels of support and resistance as just that, potential levels. They're areas of interest where there's the potential to find support. We look for the evidence on a shorter term time frame and then look and say, where are we in relation to that level? Well, we closed above it again. Intermediate term, we are below a declining 5-day moving average, and that's the reason I've been telling subscribers at Alpha Trends the last couple days we need to go a little bit slower in regards to these technology stocks. But it's done zero damage to the major uptrend that we're in. We still closed right on that 20-day moving average even, and we've got a rising 10, 20, and 50-day moving average still. So the bearish case simply does not make sense for any of these markets. a little bit of caution because we're below the 5-day moving average. That makes sense. What we're going to need to see for the buyers to get back in control is maybe, back above that 5-day moving average. That 5-day moving average flattens out. So, back above this level here, 155 and a half, really puts the buyers back in control. And then in hindsight, we could look at this and say this was just a bunch of uncertainty if that happens. And maybe we pull back down first, but for now, we're going to go into next week being just a little bit cautious. The Russell 2000, this one, if we take a look at the volume weighted average price off that low, you can't really argue that it was that important. This market just free fell, but it did still come down to the rising 50-day moving average, and we closed with a very modest losses compared to where we were at one point. So this is saying that, basically there are still buyers on the dip here, and that you've got to respect that. It's easy to look at a market and say, hey, things are falling apart in the moment, and you get stopped out. But as the buyers regain control, it tells you that this was basically a non-event in terms of the memory of the market. The average price since that event was 151.30. Here we are at 153. So $1.70 higher basically says, that's not significant. It was an emotional pullback within a primary uptrend. Semiconductors had a little bit more damage done. Earlier in the week, I had been thinking that this was going to be our low, because the volume weighted average price off of this low right in here, we did bounce from that level, and it's also where we see the 50-day moving average, which is rising here as well. So as I always look at it, I say, we're at a potential level of support. Let's look to shorter term time frames for actual evidence that the buyers are in control. And from this gap lower, you can see that where we stayed below that volume weighted average price at the highest point that we saw on the bounce on Thursday, and then sellers came back in. So we're still cautious on this group. It's below a declining 5-day moving average. I think that it's likely today was a shakeout here, but we don't know until after the fact. We only know true support or resistance after the fact. We have a level of interest that says it's likely that the sellers were kind of cleaned up in here today, but in order for the buyers to regain control, I want to see this 5-day moving average flatten out. I want to see it get back above the volume weighted average price from this gap lower. Then we can look at a market that will begin to digest these gains a little bit more through time. The biotechs continue to be, a problem here. They're below the declining 50-day moving average. They split 3 for 1 today, as you can see on that chart. The intermediate term, the buyers are gaining back control, but it's certainly very choppy in a group that I'm suggesting people stay away from. I want to talk about some stocks that I've mentioned on Twitter recently, and one of them is Twitter. So Twitter is, as you know, if you've been following my work, I was talking about it since the earnings over here. The stock gapped up on earnings, and then it pulled back. I was looking for potential support in here in a higher high that never happened. Instead, the higher high came here. We didn't buy at that point because it was extended. Instead, once we saw that it pulled back, tested that 5-day moving average, and then we saw it get back above the volume weighted average price from the peak. This is where we bought this stock for a swing trade at Alphatrends. We got out of some initially on a quick move higher. We got stopped out of some over here the other day, and then the rest of it was underneath this level right here. Right now, we don't have a position in Twitter. I'm looking at it, though, as a potential set up once again, but it's not ready quite yet. You can see that the stock is trying to find support at the conjunction of the volume weighted average price from this low right here, the volume weighted average price from this peak, and the volume weighted average price since the earnings. So it's trying to stabilize in that area, but we're still below a declining 5-day moving average and below the volume weighted average price from this peak. So I don't think it's time to be a buyer of Twitter yet. We're looking at a 15-minute time frame here. And by the way, anytime I switch a time frame, if you're confused, just look right here. It'll tell you exactly what time frame we're looking at. So Twitter, I'm going to be keeping an eye on this one for a potential setup, but I think it's probably at least through 2 to 3 days away. Coming into the week, I had pointed out that Roku looked like it could get moving here based on some volume weighted average price levels. One, the volume weighted average price from this gap was holding and we had a shakeout there. And then two, it got above the volume weighted average price from this peak. So we bought this stock on Monday. We sold some initially as it made a quick little run. I had suggested it looked like it was headed for $50 a share. And what ended up happening was we actually ended up getting stopped out right here at 48.50, I think it was, on that on that day 3 days ago, as it gapped up and then undercut the lows for that day. We didn't get the peak. Most of the times we're not going to. In fact, 99% of the time I'm not going to get the peak of a move. But the point is to try to have a disciplined, consistent approach that you look at, such as BGC is another one that I've been talking about. I've been talking about, the fact that the volume weighted average price off of the peak in 2013, that the buyers were regaining control there. Let's just redraw that in so we can make it more clear. That the stock looks like it's been, the resistance at this volume weighted average price off the peak in 2013, if they didn't scare you out on the way down, they wore you out. Now that prior resistance is holding as support. Well, then we use that information to then take a look at the 30-minute time frame, to take a closer look at, let's actually look at the 65-minute time frame. So what we were looking at here was the volume weighted average price from this move and from this peak. And what we ended up doing was getting involved as it made this higher high right here above this level. We sold a little bit there, we sold some today, and we have our stop underneath this level as a swing trade. So, we're up about 80 cents in it or so, and I've pointed out that it's a good swing trade candidate, but it's also a good investment candidate. I'm not here to tell anyone what to do ever. What I like to do is be the coach and say, here's the opportunity. Make the time frame your own. I'm here to help you and point out ideas. It's your money. Do what's right for you personally. Know your time frame and use all the correct tools to make that best decision that you can by fully understanding market structure and when the buyers and sellers, start to, where these battles are found and where it's obvious that the buyers gain control back from the sellers.